Today, today is a chop day. We're getting a lot of choppy action on the SPY, um, and by it being a chop day, I I'm out of money. I can't trade anymore, so I just wanted to look at contract pricing opposed to for SPX. SPX you can trade um, out of the money. SPX is tethered to the SPY as far as price action, and it's leveraged, so you there's more money on the SPX than there is on the SPY uh, on momentum runs. It loses money fast too because when people jump out of it, it's gone. But the thing about SPX is, I mean, it's a daily expiration. It's always an expiration whenever unless you trade a day or two ahead or several days ahead. Um, it's if you trade same day, you can get every day expiration, and that's where the highest price is or highest money value is. So let's look at it today. If we look at the chart here, there's a lot of drawing on there, but if we look, the time of this bull run long position started at 9:33, and the pricing. Well, I guess pricing doesn't really matter. We can look at strikes out of money. It's 412. The 412.63. The SPX would be more like four. I guess I can look at the SPX. I don't have to look at the SPY. Here we go. The SPY is the correlation of the SPY is here. I watch the SPY but trade the SPX. And so yeah, 933, and you just the price is like 41.30. Down here is 41.413. Not even. 412.63. Definitely not a one for one in that regard. But as you see, the price action is evenly matched. So anyway, I think I'm gonna have to keep SPX on chart on the screen too to make sure that everything correlates properly. Seems though we're not one for one here. No pre-market data shown. That's why I look at the SPY because I can see what action was happening. I have to look at a different chart, a different broker, because IBKR trades pre-market. Thinkorswim does not, as far as contracts and SPX, but it does trade at the open. And at the open at 9:33, if we look at the contracts of SPX, it's a long position. So it was 41.30, I believe. All right. So in the money was 41.30. Let's look at that one. 41.30 in the money. I don't trade that high, but I just want to see where we're gonna end up at. What was that? 8B. Okay. So let's put this on chart 9. We look at chart 9. Okay. We go from, let me see something here. Let's max this out. Make this 9. Okay. Let's not do that. Let's do it here. Get rid of show studies. Alrighty. And so why I want to come here is that it should be, it is. What now? Was it doing it here? No, it wasn't. It wasn't showing me my pricing. So we'll go back to this chart. I wanted to see the pricing here so I can get exact candle information. At 9:33, the low, which is here, is represented L for low, H for high. The low, the lowest point I can go, 1759. So let's go down here. One contract at 1759, and then the second contract high is 35.91. Okay, so that's 104%, 104.15, right? Let's do this. What was the strike? Was 41.30. So we put the strike there. I know this is ugly, but and then it went up 104%. We'll give it a 0.15. Is that working? Okay, that's that strike. If we look at now we look at this one, 41.85 out of the money. How far? Let's look at something even, like 4,200. 4,200 is down here. I did trade that one. So if we go back to the charts, 4,200. We zoom in on that. Alrighty, so we have the low of 97 and the high of 120. So we go 0.97, high of 120. Alrighty. What am I talking about? Boy, I am on that juice. High of 320. That's the highest position right here, the lowest position right here. Highest position closed at the same time. Let's look at this. So it closes at 955. 229%. That's at the 4,200 strike. That's far out of the money. This is 229%. 0.9. All right. And we go down even further out of the money. This 42.10, 41.30 on a call. These are all calls, of course. They're just following the biggest run of the day. The biggest run of the day was the second run of the open. If we go back and look at it, the second run up, we dropped a little bit, 3 candles down. Then we took off, hit the high of 41.60 or so, and then we've been fluctuating in the range ever since. So if we look at 933, we got a low of man, I'm tripping. 42.10. Let's go. Is that the best one I got? 42.10. See, these didn't move too far out here. This gets sketched, doesn't it? Gets sketched. Well, these are calls, and it's not running, so these probably didn't go too far. So, but I didn't trade any of these. Let's see. Where's the volume at? There's a lot of volume down here. Let's see what this one did. It's way out of the money, too. This is 42.40. You think 42.50 more, but all right, let's look at that 42.40. We're going to add, let me just copy it, paste it. All right, let's look at that contract. The charts didn't move. Low of 5 cents, high of, and see, look, they bail out early. See, some of the higher contracts, this went higher up here at 955, but the cheaper contracts they bailed at 49. So the high here is 27. So we went 5 cents to 27, and that is hard to get. The volume on this is 192. So for us with small accounts, 192, that's a lot of contracts that can be bought now. So five, I mean, who knows how many people bought at actually five? I can't get any lower in time frames. I guess I could, but time frame at 1 minute is the lowest I got so far. So five, let's type that in. 0.05, and we hit a high of 27, right? Yeah. So that's 440%. So say if 10 people, you bought 10 contracts, which gave you $22, but that's not a lot. That's a lot of money for what it is, but 10 contracts would have cost $50, made $220. That makes sense. That makes sense. All the sense in the world. But 440%, right? And that's at strike. But see, you're getting really close to not making any profits. I guess watching volume was everything. When looking at these trades, it's all about watching the volume, I guess, because the volume started taking off. This is open interest, and that's how much moved today. This is because the volume didn't move much, and the fact that these all have the same pricing. This is 42.40, 42.35, 42.45. I guess I could look at the next 42.35. Let's see. 42.40. What am I doing here? I didn't write it down. 42.40. And we look at MA. What is this? Are these percentages? My bad. My bad. Let's see. Uh, Sale currency percentage. Decimal. That's correct. And the percentage was 440 even. Right? So the big money, it seems, is further out than, people playing, closer to in the money, which is cool. But if there's a suspected run coming, if I can determine that there's a run coming, like this is sketchy. What happened right here? This is what I want to know. During consolidation, what happens to the contract? Not much money was made during consolidation. If we look at that, we got the 5 cents. Say we got a 5 cent entry. It's so sketch, man, because something tells me most of the volume is up and around here, up a lot higher than at that 5 cent peak down there. But that's so enticing for 440% profit. What's the profit? This is 10 cents. So 10 cents is guaranteed. Let's look at 10 cents and how much profit that was. Because you got 5 cents because the sell off was massive at that point, and it went back to nothing. But 10 cents gave you 170% profit. And 10 cents, $10, $100 of investment gives you $170. Not bad, not bad. Um, my computer's running really hot right now, and I don't know why. It's struggling. All right, so during consolidation, if we look here, is this 933? It is not. This is 933. Here it is 932. 932, what was the volume? This chart here. 933, the volume was 81. So a bunch of people jumped in at 81, got 7 cents. What's 7 cents profit? A bunch of contracts. Let's say a bunch of people, it was a bunch of contracts. I don't know how many traders it was, but it was 81 contracts were purchased at 933. And it gives 285%. It still blows away. Well, the 4200, it's much better than, but it doesn't blow it away. But it blows away the in the money numbers at 285%. And so if we look at that, and we go here to 15 cents, because it went sideways for a while. I'm looking at that because I'm like, do you even profit during consolidation? And we got here 15 cents up until 948. Uh, oh, that is annoying. I don't know how to get rid of that label. Zoom it. Maybe that'll help. Wow. It had to go all the way up to this point in order to take profit. This is 948 right here. So all of this momentum, you get nothing. People diving out, man. Look at the contracts. I mean, it doesn't drop 10 cents, which is cool. Even on this red and this red, it stays 10 cents the whole time. And this is the reason why you buy, you know, you buy small, take a risk and buy some below the market. If the average is 10 cents, buy on the bid or just above the bid. If the bid is screaming and it looks like it's going to run up, if the analysis says it's going to run up, but then you look at this, let's get rid of this. If you look at this, and I'm just surprised that with all this fluctuation, it held, but I guess, I don't know. Let's look and see if the volume fluctuated. 11, 13. Look at that. Look at this. The fear just got ridiculous. Now, is that buy? Well, see, I don't have buying or selling in here. It'll be a red candle if I put on. So I don't know whether these were bought or sold. That's a lot of volume, right? So I'm like wondering if all of these contracts right here, because there's a lot of little contracts going on, and there's a lot of dump out, and then here we had 31, and then the buying begins again. We had 30 contracts, 54 contracts, and then it just goes berserk. I guess everybody's holding out, waiting for a big run up. This one takes 110 out, 15, 3. This is odd. The dump out here, and I noticed that too. I noticed that when while I was trading, that there was a huge dump, but I wasn't trading, of course, that number. I was trading either for 4200 or 4210, or even this one. I don't know what I was trading, but I wasn't trading that one. That I was the 4240. I wasn't trading that, but I did recognize a big dump out. What time is that? That dump out is at 46. So if we look at this one, and this 46. Is this 46? This is 46. Okay, that's not the huge dump out I expected. There was a huge dump out somewhere. And it was like, man, it's moving. Why are we still dumping? This is a big candle, but there's a lot of buy-in right here. Isn't it odd how you get all this candle action and whatnot? But see, the thing about profits on these contracts, the thing about profits on contracts is that um, the lower you are to zero, the closer you are to zero, the more it takes to move the contract, right? See, these contracts can move incrementally. Right? There's so many increments in between the next dollar. So you have 14 or the next 10th. So you go 5 to 6, right? Just like it would down here. But that's there's a lot. It's in the money, number one, and for this to go well, okay, that's not what I'm talking about. I'm not talking about the tenths. I'm supposed to be talking about for it to double, right? For this to double, I'm thinking in terms of a double. For any of these to double, it takes a lot of effort. Number one, it's not close to in the money, but it also takes a lot of effort because at 5 cents to double to go to 10 cents, it takes a lot of movement. It takes a lot of momentum. I believe. This is a belief. I don't know for sure. I just watching this stuff and looking at how it operates. To get from 5 to 10 takes a lot of momentum. To get from 10 to 20 takes a lot of momentum. And of course, there's a finite number of contracts, and so you buy up the contracts, and people are buying into the contracts. You can buy them up, and they become more valuable. But to make these things double um, takes some effort, opposed to making this double. The effort is different. You know, um, so these move a lot more, and it's my whole point. You can scalp closer to in the money a lot more, but you'll get 20%, 30%. In big runs you get 100%. As to where if I look at these, um, scalping 5 to 6 is difficult. It takes more effort to move the contracts um, to make profit, and that's what I'm believing is the reason for the flat line here in these contracts is that it was difficult to move it. It jumps from 10 cents to 15 cents and increments in between 12 cents here. So, it takes a little bit more. If you look at this contract, the in the money, the fluctuation was huge during that same period of time. We ran from 1759 all the way up. We didn't stay at one. I mean, we kind of stayed in this price zone, but you could scalp a lot of this stuff, and make profits. You don't have a lot of volume here, so um, getting in and out of positions might have been a little tougher to scalp, but um, the price action fluctuated a lot more here, and I just think it's because there's more of an increment in between that price action than there is for the lower price action. There is no 51 cents or 52 cents. Or what I'm saying, five. There's no fractionals, is what I'm saying. There's no fractionals. So even though it costs you $5, it's not $5.13, or anything like that. It's just $5, and it jumps to $6 which is a huge jump in relations to $5 to $6. Let's look at that. Well, let's look at $7 to $8. So that's 14% of a jump. But if we're looking at 430 from one candle to the very next, what's this? 1765. It's 14%. Look at 1765, and that same 5 cents, 17. It's not even 5 cents. It was what? It was 10 cents. So 1775. Of course, that's 57%. So I mean, it's a huge 0.57%, right? I'm saying, so when we're looking out of the money, when I'm looking out of the money, I'm looking at the fact that it takes longer for contracts to move. It takes more momentum to move them because they have to travel further in price by percentage than the ones in the money. And so scalping in the money is a lot easier, but you don't make as much profit. Because people can get in and out and all that stuff. I think there's various reasons why. This is all speculation. It's just observing what the markets are doing. You know, and the contracts, the cheaper contracts for a bull run can make a lot of profit. As we see right here, 440%. If I sat on the bid, because we know these contracts move in increments of five. If we look here, 0, 5, 10. I mean, they could move in between too, but look at, they're just sitting here waiting to move at increments of 5 and 10, right? And as we saw on the chart, they do move. What is this one? They do move in between 5 and 10. This one was 7. This one hit a low of 7. That's the 5. This one hit a low of 7. This one hits 12. So there's increments in between. This one hits 13. There's contracts being bought and sold in between the increments of 5, but it still jumps in that regard. So to buy, if I sat on 5, the whole point of saying that is that I could sit on a bid with 5 and wait. If I expect a breakout, if the daily candle pattern is telling me that we're expecting to go up or whatever, and I'm feeling that bold, I can sit here and wait at the open at a position of 5 or 7 and wait to get filled for best price action. And then if we get here and I feel sketched out, at least I doubled my money and paid my commissions at 10. So that's a good plan. I could even sit up here at 15. So if I bought 5 and say I bought 5 contracts right here, or even at 7, I bought 5 contracts. If I get sketched out, I can place 2 for a sell on the ladder at 15 and 3 down here at 10. So even if we don't make this and I got to drop off and sell, if we don't make the 15, I can still dump at 5 or 7. That's if my analysis was correct from the start that the price action is going to go up. But the other problem is if people are going to buy at that price point, the volume on SPX out of the money is not the same as SPY out of the money. SPY contracts out of the money is a lot of. Let's look at a SPY contract out of the money. Let's go back real quick. So we're at 4155 SPX. It was a 4200, right? So the volume on 4200, 18,000. If we go back to SPY contracts, what's today? Is today Wednesday or Tuesday? Wednesday. All right. So if I look, so it's an expiration day today for SPY. If I look at the volume at 4420, which would be the same, there's 42,000 traded, only 18,000 traded on that highly popular SPX. So much more volume. If we look at that contract on the SPY, let's see what it did. All right. All right, so at 933, is that what this is? Yeah. We had a low of 10 cents, and we can stop here and say we hit a high of 30 cents. All right. I don't do math in my head because I don't ever want to be wrong. Alrighty, so that's 200%. That's pretty good. SPY. It's 200%. What was the number? It was 4240. So the SPY would be 424, 425. I'm getting brain clogged here. 425 had the most volume. It did. Let's do this one. Could have done 424, but okay. Look at the chart. I didn't move. It didn't move. Let's look at 424. Interesting. Interesting. 425 didn't move. Pretty shocking. This one didn't move much at all either, boy. He playing with fire with that stuff. But what is the percentage on? Is that 500%? Can you even get in at one? I mean, I see it smacking one, but I've many a times tried to get in on one and couldn't get in at one. It's 400%. That's 400%, but I ain't in to play with, man, because not too many people got out on that 400%. Everybody was getting out at, a lot of people, a few people got out at 4%. I mean, 4 cents. Most got out at 3. 4 cents. It's 300% though, but that volume, what's that volume? Volume's terrible. 31, 152. What's 3%? 0.0. It's 200%. That is just not worth playing with. It's not worth playing with. That's too scary. Wow, so that far out of money on 0 day. Now, what I didn't check was next day expiration. So SPY next expiration is Friday, and look at that. Look at calls on SPY out of the money. Look at that. 425 is just a monster. People were not messing around with SPY's 0 day out of the money. Today, yo, what's up with that? What's up with that? What's up with that? Alright, so it's June 10th. What did I just do? It's got to be this one, but oh, okay, there's a 10. 10 in the contract. Let me make sure I saw it. Okay. 6, 10, 22. Man, out of the money. Crazy. Crazy volume. People are just not having fun with 0 day anymore. Alright, so 933 low was 34. Even hit a magnificent high at 65. So that's only 100%. It's not even 100%. 34, 65. So, oh, what am I doing? Just get rid of all of these contracts. So one contract. So that's 91%. A lot more comfortable in that 91%. You don't make the same amount of money as you would at 440 or 300%, 200%. You got 91%. But the volume is there. Let's look at volume on this. Look at this dump out right here. 564. A lot of people get in 57, get in 173, 267. They held on. Did they dump out here? And people get scared so easily out of positions. 190. Yeah. And then they 149, 144, 194, 156 on a dump out. All right. Let's look at SPX. Trade SPX the next day. 4,200. Look at that. That was expensive. 42.25. That's expensive. Yeesh. Man, what's the equivalent in price? I don't even know how to look for that. Let's look at 4,300. That's a good one. And copy and paste it. And there's low volume. Low volume. You caught the turnaround. And there is technical analysis to know that it was going to turn around. Wake up a little bit. Let's see. The low is 72. The high is 155. It's a little bit over 100%. 72, 155. Man, 115%. So, like we all know, like I know, what I'm learning is that the analyzing the same day expirations, high volatility, drop off a cliff, as we can see with some of these positions, like this one, how it opens and runs up and drops off a cliff. When it sells off, and it doesn't really recover well either, because if we look at that compared to the chop of the SPX chop, all right, it almost stays flat up here. The SPY chop almost stays flat. But if we look at, I mean, we can see it right there in that window, but If you look at the chart here, you can see that it's just a descending channel, steeper than the price action here, which is basically range trading. This is range trading. This is a descending channel. So the 0 days, man, lose money fast, but look how fast I lost money. Stays at the bottom. And it makes sense because I mean when it goes in the money it gets ridiculous. But it has to get to the money. Like if you look at yesterday on SPX, how it ran from we went from 40.80 to 41.64. So let's look at 41 contracts. 41.50 contracts. 41 41.40. I already got 41.30s in. Let's look at 41.30s. Let's see how they were out of the money yesterday. They were $11. This is expensive. No, no, no. I'm doing something wrong here. I'm supposed to check contracts for the following day. 41. They hit 41.60. Yeah, that was the following day. That was the following day. Because the day before was the 7th, and this contract is the 8th. And it started at $1,109, and it went to 41.90. But the next day on expiration day, though, look at how it just ate most of that up. But that's in line with what's going on. So anyway, 11 to 41.90. Just curious. Going out of the money to in the money was 280%. 11 would have turned to $3 grand. Interesting. What happened with one more? I'm gonna try one more. 41.60 just touched in the money. How much did that cost? Probably like $9,000. I'll put this stuff in the watch list so I can keep getting back to it. Hold up. Am I doing 10th day? I don't need the 10th day expiration. I need the 8th day expiration. 41.60. All right. So it cost $450, went to $21.40. $450, $21.40. Okay. All right, I had enough of this. We'll continue this later. I just wanted to see where the profits were on and how to study up on some of the profit potential. There seems to be a lot of risk when you trade in SPX, and it's tough to get in and out of some of it because of the low volume, but it's also tough to make profit on it, especially when the profits are moving. When we look at how much, you know, this moved, and I mean, the profits were great because, I mean, this only went, you only made $2 if you traded $400. You made $2 on that, $2.50. But if you traded the contracts, uh, you made a lot more than that. You made a lot more than that trading contracts. What is this? Yeah, it's expensive stuff. But let me see what happened with these out of the money in that day. SPX called 4,300. It started at $55 and went to 170. So it's 200 something percent or so, somewhere around there, right? 55, 170. Yeah, 200%. 209. All right. Well, that's enough. I'm out.